Greetings, traders, and welcome back. Chris here, as always, and today I've got something special planned for you all out there, and that is story time. We're going to talk about the time that George Soros attempted to crash the pound. This is a particularly interesting story from a trading perspective, so we're going to dive into all the juicy material that entails this very intriguing story. But before we do, if you would do me a favor and click that like and subscribe button down below, I would really appreciate it. Now, without further ado, let's get going into story time, a new event here that we're going to be doing quite regularly. Black Wednesday. Just the sound of that sounds doomsday-ish. It sounds very scary, and in reality, it really was. There were some incredibly profound effects as a result of Black Wednesday, but let's start off with the date. September 16th, 1992 is what is referred to as Black Wednesday. It's when we saw the pound sterling crash and was one of the primary reasons itself why the UK was not able to adopt the euro. The event ultimately forced Britain out of the European exchange rate mechanism. The fall of the pound itself created immense wealth for investors like our old pal George Soros, and it's estimated that he made somewhere around $1 billion on this day. Black Wednesday also caused tremendous turmoil in the political landscape of Britain since taxpayer money was spent in a bid to keep the pound afloat. So what was Black Wednesday? Well, 300 traders had built up powerful short positions on the pound leading up to the depreciation of the currency itself. It was a requirement of the European exchange rate mechanism to keep the currency at a particular value in order to ensure a stable transition towards a common currency with Europe itself. Black Wednesday was a major obstacle in this development. The UK government was forced to resort to a number of measures in order to prevent the pound from collapsing. The interest rate in Britain rose to 10%, and foreign currency reserves were used to purchase pounds in the markets where there was a huge sell-off. In spite of these measures, the UK government was unable to prevent the pound from falling further. Since the pound had depreciated by a significant margin, it became difficult for the UK to continue its membership in the European exchange rate mechanism. The result of Black Wednesday was disproportionate wealth being amassed by investors like George Soros at the expense of the UK Treasury. That is the reason Soros is said to have broken the Bank of England by taking the short position that he did. Speculators against the currency built up the short position, and hedges were created to account for the falling pound. The value of these positions were so high that the intervention of the UK government was not able to turn the situation around. It is also believed that the lack of involvement by Germany's central bank was one of the reasons that aggravated the sell-off. The German bank could have used Dutch marks to purchase pounds, and that might have bolstered the efforts by its counterparts in the UK. However, this did not happen, and it was one of the reasons that encouraged speculators to go short on the pound. The build-up to Black Wednesday started when the UK government followed a semi-official policy of pegging to the pound. The various events leading up to the crisis began in 1987 when the UK pegs the pound with a tolerance level. During the late 1980s, the British currency was following a semi-official policy that allowed it to fluctuate by plus or minus 6% against a basket of currencies. This was done in a bid to shadow the German economy, which saw a low inflationary environment and strong economic conditions. Then, in 1990, the UK committed to the exchange rate mechanism policy. While the UK was still trying to follow a system of fixed exchange rates, it was only in 1990 that the country joined the ERM. It now became mandatory for the UK to ensure that the currency remained stable. The pound at the time was one of the weakest currencies in the ERM, and joining it was considered to be a major blunder. And then in 1990 to 1992, the interest rates set forth by Germany themselves were extremely high, and in an effort to contain a high inflationary environment, the US dollar had also depreciated during this time. This did not fare well for the UK themselves. The goods exported by the UK became more expensive in the US market. It became really difficult for the UK to keep up with the Germans' efforts. Being a member of the ERM also ensured that they could not follow a free-floating mechanism that would have made made a price of its exports situation a bit cheaper. Then we had the situation where we had the depreciation of the pound itself. The macroeconomic environment in the UK as well as Europe paved the way for a weakening of the pound. Traders like Soros looked to exploit this condition and decided to bet against the pound. Positions worth billions of dollars were taken, with speculators adding to the volatility of the currency. And then finally, intervention by the UK government happened. The Treasury had already started intervening in the foreign exchange market, thereby depleting its reserves. Without much help from other members of the ERM, the effort themselves proved rather futile. And there's our old pal George Soros. If you're looking for something to be on Halloween, he wouldn't be a bad choice. Black Wednesday saw the fortunes of George Soros rise, and he earned the reputation of being an expert forex trader. Soros was of the opinion that it was unrealistic for the pound to maintain its level at the time in the UK when it joined the ERM. He believed that the pound would have to be devalued at some point in time. This prompted him to take a short position on the currency. Through his quantum fund, Soros started selling pounds worth almost $10 billion. The involvement of other traders and speculators also helped Soros as it piled onto his position and favored the devaluation. It should be noted that Soros did advertise his opinion, and it helped create a panic situation for investors who had long positions on the currency. Those investors were made to believe that the pound could no longer be resilient at the level that it was at. The narrative did have a basis, since the macroeconomic environment within the UK did not support the existing price level for the pound sterling, so this did help with that psychological snowball. We should also note that Soros had already started building up a position sometime in August as the evidence of a weak UK economy began emerging. Soros started taking a leveraged position, therefore amplifying his exposure, which was already large. It was unlikely that such exposure would go undetected in the hedge fund industry, and that others would probably and did follow suit. It was certainly a risky position to take, since the pound was backed by the UK government. However, Soros did back up his analysis and was very confident of what was going to happen. He was aware of the lack of foreign exchange reserves that the UK government had, and he also predicted that other economies would not be coming to the rescue. It is estimated that Soros made profits worth £1 billion in this period. After the dust settled, being part of the ERM was difficult for many countries, and there were breaches in the tolerance level set by the group. Currencies like the Italian lira were also under pressure, but investors focused mainly on the pound sterling. Rules were relaxed, and member states were allowed to pursue monetary policies of their own. For the UK, the short-term effects were very profound. Their economy entered into a recession for the first half of the decade. The housing market crashed, and so did the business environment within the UK. One of the major fallouts of Black Wednesday was the decline in popularity of the Conservative Party, or the Tories. The party lost a number of elections that were held after this event. Once believed to be party promoting economic reforms, the failure in the financial system changed the perception of the people towards the party. In 1997, they suffered a landslide defeat and were not voted into power for quite some time thereafter. In terms of policymaking, the UK could now tackle the economic instability with a more independent mindset. It was no longer subjected to the constraints set forth by the ERM. The dependency on other economies was removed, and the pound was now under a free-floating exchange rate regime. For the first few years, the economy was still in a quagmire, but Black Wednesday did set the tone for more robust economic reform in the longer run. Policymakers were now in a position to set interest rates based on the inflationary environment back home. It no longer needed to base its rates on the interest rate regime that was going on in Germany. The perception of the masses also changed, and the pro-Euro sentiment instilled by the Conservative Party were no longer seen in a good light by the British public. Depending on how you look at Black Wednesday, there were definitely effects that could be classified as beneficial. The new policies set by the government were better tailored to the economic environment in the UK. Within the next few years after Black Wednesday, the government was able to tackle inflation. By maintaining a floating exchange rate system, the economy managed to recover. The rising unemployment rate was also brought under control. Most importantly, the UK was able to maintain an independent status that resulted in a stronger economy. Black Wednesday Wednesday also showed the world the demerits of introducing a fixed-rate system of exchange rates across Europe. It paved the way for more relaxed norms across countries in the region and enabled a smoother transition towards a common currency in the region. The integration of economies within Europe was made possible after the reforms introduced in the aftermath of Black Wednesday. These policies gave more leeway to weaker countries to strengthen their economies. The rule imposing a cap of 6% fluctuation in exchange rate was also relaxed to enable a fairer movement of currency rates. For UK, many consider Black Wednesday a blessing in disguise. Since the sovereign debt crisis hit Europe in the late 2000s, billions of dollars were pumped in to bail out weaker economies. Without the intervention of countries like Germany, the Eurozone would have fragmented. Meanwhile, Britain managed to keep itself on the sideline without almost any economic repercussions. Had the UK adopted the euro, it would have had to contribute in order to bail out countries like Greece. The economy of the UK performed comparatively better during this crisis, so you could argue that Black Wednesday helped save the country from further costs down the road. As stated, Black Wednesday wasn't all sunshine and rainbows. The terms of the ERM could have been considered unreasonable, and it was difficult for many countries to keep their currencies fixed. Black Wednesday damaged the reputation of the Bank of England and the UK. The amount of the loss incurred by the UK was estimated to be over £3 billion, which was a very substantial amount back in the early 1990s. The semi-fixed structure also ensured that the pound could not be devalued, and this hurt the business of exports. Similar problems were faced by other weak currencies like the Italian lira and the Spanish peseta. These currencies were overvalued when they entered the ERM, and their struggle continued even after the UK left the group. Some of the repercussions of Black Wednesday are visible still today. The aftermath of the event resulted in a more integrated Europe. It paved the way for the formation of the Eurozone, although some of the problems it caused continue to exist. While there was a common currency in the region, countries were tied to a single currency, which restricted their ability to act independently. Exchange rates used to be a tool to control economic policies, but this was no longer viable with the euro. For the UK, the impact was much more short-lived. Their economy went into a recession, and inflation continued to be sticky. There was a lot of firefighting that the government had to do to restore growth in the economy. High interest rates meant borrowing became expensive and housing markets collapsed. The newly elected Conservative Party's term went downhill after Black Wednesday. The event also raised concerns about the ability of governments to control their economies. Meanwhile, the reputation of George Soros increased many times over. It also necessitated the involvement of market participants in the development of policies. So to wrap it all up, is it possible for a Black Wednesday style event to happen again? Well, let's see. Is it possible? Yes. Is it probable? No, not so much. Of course, it can happen with the right circumstances, but undeniably, there are more checks and balances in place now to help identify and prevent a type of occurrence like Black Wednesday from happening again, or at least to limit the impact that it has. Black Wednesday is arguably one of the greatest events in recent economic history, showcasing the ability to short a market and cause some very, very crazy outcomes when you get other people on board with you. But until next time, folks, thank you for joining me for Storytime. It's always a pleasure. Cheers, folks. Over and out.